For this session, we will continue with the powers of the BIR through the CIR. Our topic now is the executive power of the CIR. So we have now the assessment and collection of all national internal revenue taxes, fees, and charges. So what is the assessment and collection? So we said whenever we talk about assessment and collection, this talks about the tax administration. And when we talk about tax administration, it could be the executive power, quasi-judicial, and quasi-legislative. But if it's purely assessment and collection, that means that is the executive power of the CIR. So let's look into the executive power of the CIR. First item, the power of the commissioner to make assessments and prescribe additional requirements for tax administration and enforcement. That is under Section 6 of the NIRC. And under Section 6 of NIRC, we have the following. First, we have the to examine uh, to examine returns and determine the correct tax due. So as a rule, assessments, to make assessments as a rule, we have 3 years to assess from the date of filing or the deadline, whichever is later. The exception there is the 10 years if there is fraud from the date of discovery. So normally that's the rule. Now, how do we prescribe additional requirements? So when we say prescribe additional requirements, these are other requirements provided under the tax code. So the first one, for make assessments, to examine returns and determine the correct amount of tax due. So when we say examine returns, who can examine? Normally, it is the CIR or the authorized representative. As I told you earlier, when we talk about LA, you now authorize a revenue officer to conduct an audit or assessment of a particular taxpayer. If there's an audit or assessment of a particular taxpayer, then who examines the return and determine the tax due is the taxpayer. Therefore, to make assessments, who can assess is either the CIR or his authorized representative. And the failure to file a return furthermore shall not prevent the CIR from the examination of any taxpayer. As I told you, that can be considered as a fraud. As a rule, how do we examine the returns again? As a rule, 3 years. We examine within 3 years from the date of filing or deadline, filing or deadline, whichever is later. However, we can examine 10 years if there is fraud and when upon the date of discovery. Now, in the examination of returns, the next question is who? Who examines it? It can be the CAR or his duly authorized representatives. And when we talk about duly authorized representatives, this is through the different notice of audits. So what are the different notice of audits again? We have letter of authority. We also have tax verification notice. And lastly, we also have your letter of notice. So that is on the first one, to examine returns and determine the correct amount tax due. Next, to assess based on best evidence available. So if ever there is a failure to submit returns, statements, reports, and other documents, then we use the best evidence obtainable rule. So when we say best evidence obtainable, any evidence available for the taxpayer, you can for the CIR, you can use for the any data provided under the system for matching, uh, any data used by or any data taken by the commissioner for the audit of the taxpayer can be used to determine the tax due. So when we say to assess based on best evidence obtainable, this is only used again if ever there is a failure of the taxpayer to submit uh, returns, reports, statements, etc. And how does the CIR determine the best evidence, or how can the CIR avail or obtain best evidence. That is through the power of the PIR to obtain information. So you still remember how to obtain information? You can now obtain information from regular basis, whatever is provided in the system. Also, you can obtain information by making canvas. You can obtain information by subpoena or through summons, etc. Next, to make or amend a return for and on behalf of taxpayer or to disregard one filed by the taxpayer. So when we say to make or amend a return, the CIR can amend whatever is filed by the taxpayer. When we say to assess based on best evidence, what's the problem here? The problem is there is a failure to submit. On the third one, okay, so this is the first one, this is the second one, on the third one. The third one here is, the problem is the return is false or fraudulent, okay? The return is false or fraudulent. So what can be done by the CIR? The CIR can make a new return for that taxpayer, or it can amend the return provided by the taxpayer. Take note, only if the taxpayer files a false or fraudulent return, you can make or amend. How about if ever failure to file? How about failure to file? Of course, you can only make, okay? You can make a new return if there's a failure to file. If there is a false or fraudulent return, you can make a new return or you can amend that return. And who has the power to do that? The CIR. How again? How can the CIR do that based on the information gathered by the CIR? And how does the BIR or the CIR obtain information again? You can canvas, you can obtain information based on your records, etc. Okay, so that is to make or amend for and on behalf of a taxpayer. Lastly, what if the return is false or fraudulent? What again can be done by the taxpayer? By the CIR, you can now disregard. Can the CIR do that? Yes, it is within the power of the CIR. So as long as you know the previous powers, it is easier to understand the executive power of the CIR because those powers complement the executive power of the CIR. Now, let's go to the fourth one. To conduct inventory, stock taking, or surveillance, and to prescribe presumptive gross or sales or receipt. Let's start first with conduct inventory taking or surveillance. So normally under your inventory taking or surveillance, we find different taxes depending on the inventory ending or inventory reports of the taxpayer. As a rule, a taxpayer, some taxpayers or business taxpayers are required to file their ending inventory. And based on that inventory, if ever it does not match again the records, then there can be an assessment. We call that your munching. Uh, under the current practice, normally we issue mission orders for surveillance or stock taking. So for conduct inventory stock taking or surveillance, we have this so-called mission orders. And these mission orders can either be a covert surveillance or overt surveillance. So when we say covert, C-O-V-E-R-T, it is secret. Meaning, if you are surveilling something or there's a surveillance of a taxpayer, it is not known by taxpayer. But when we say overt, this is known by the taxpayer, okay, through the mission orders. How about prescribed presumptive gross sales or receipts? So when we say prescribed presumptive, you do benchmarking, okay? You are doing benchmarking. You try to benchmark your assessment from other entities or businesses to prescribe the sales or receipts of the taxpayers. Next, number 5, to inquire into bank deposits. Okay, they can inquire into bank deposits. As a rule, okay, general rule, there is a bank secrecy. So, due to the bank secrecy law, whatever are your deposits, it cannot be inquired into. The exception to the rule is the power of the CIR. But the CIR can only inquire on the following instances. First, for the determination of gross estate. Why? We need to know whatever is the amount of cash in that particular bank account to determine the gross estate. Next, as to your compromise settlement. What is this compromise settlement? If ever the ground for compromise settlement is financial incapacity, okay, the ground is financial incapacity, then you need to look into the bank account of the taxpayer to determine if the taxpayer really is considered incapable of paying the tax. So that is one of the exemption to your bank secrecy law. The CIR can inquire for compromise settlement if the ground is financial incapacity. Next, if ever you are accrediting and registering tax agents. Why is this so? Because normally it is the tax agent who pays the taxes. So, for example, the entity will transfer whatever is the amount of tax to be paid. Sometimes you look into that, whether it was fully remitted or not, etc. Last, when can we inquire if ever we are trying to uh, prescribe additional requirements? Okay, so as a rule, you can inquire if you want to determine the gross estate for compromise settlement for financial incapacity to accredit and register tax agents, and if ever it is prescribed by the additional requirements provided for by the BIR, then you can inquire into bank deposits. But take note of this one, compromise settlement. You can only inquire after the taxpayer provides for a waiver of his privilege under the bank secrecy law. So if ever there's no waiver, you cannot inquire. So ganito, let's say the taxpayer claims financial incapacity and the taxpayer wants to compromise. Before you can compromise, before the BIR can compromise, the taxpayer will sign a waiver. Sa BIR, magbibigay ng waiver, si taxpayer sasignan niya yung waiver. Ipapakita niya yon sa bangko para malaman niya kung may pera ba o wala. Pero, what if there's no waiver? Can you inquire for the bank account? No. So, in a compromise settlement, waiver is needed normally. Next, to terminate taxable period. When we say terminate taxable period, you want now to collect the taxes. So instead of, let's say, um, annually, quarterly, or monthly is the payment of taxes, you can immediately terminate the taxable period. When we say terminate the taxable period, you cut off the tax period. So in our example, if the tax period is annual, you can cut it off to let's say semi-monthly, semi-quarterly, or semi-annually, etc. Basta i-cut off mo siya dun sa compared dun sa normal niya. So if ever you cut it off, the main reason here is for you to collect taxes. The reason is to collect taxes. So if you want to collect taxes, then you can terminate the taxable period. However, there are only instances when we can terminate the taxable period. So what are those instances? Normally, if ever the taxpayer is absconding, TP abscond. So when we say abscond, the taxpayer is intending to leave the Philippines. Next, if ever the taxpayer is other types of abscondment, if ever you are hiding, you are concealing, that is also abscond. Another is the taxpayer removes or conceals property, then that is still a reason for the CIR to terminate the taxable period. Another reason is if the taxpayer is now retiring from business. If the taxpayer is retiring from business, then you can terminate the taxable period. Lastly, when can we terminate the taxable period? If ever there's no obstruction of collection of taxes, you can terminate the taxable period. So there are four instances wherein we can terminate the taxable period. So first, if the taxpayer abscond or intending to leave the Philippines. Next, if the taxpayer removes or conceals his property. Next, if the taxpayer is retiring from business. Next, if ever the taxpayer obstruct the collection of taxes, then we can terminate the taxable period. What do we mean by termination of taxable period? You are cutting off the normal period to collect taxes. Why? Because you are now immediately needing the collection of taxes. What's the reason? Kasi nga, aalis na siya, edi collectin mo na yung taxes. Magre-retire na yung business niya, edi collectahin mo na yung taxes. Kasi kung hindi mo makokolekta bago pa mag-retire, let's say, annual yung tax, due April 15 next year, August ngayon, and then magre-retire na siya. Alangan, antayin mo pa yung April 15 to collect for the tax? No. So because of the immediacy criterion, because you need now to collect the taxes, you are now terminating the taxable period. Therefore, you can now collect the taxes. Next, to prescribe real estate values. So when we say prescribe real estate values, this is known as the zonal value. Zonal value. So under the zonal value, what happens is that the CIR divides the Philippines into different zones. And in those different zones, those zones are provided different fair market values. So for CIR, we call it zonal value. So number 7, for CIR, through the national taxation, we call it zonal value. And the local treasurer, through local taxation, we call the value as assessed value. Okay? Ang valuation under national taxation, nasa power ni CIR, tawag natin zonal valuation. Ang valuation under local taxation, exercised by the local treasurer is known as the assessed value. Okay? So zonal valuation yung tawag naman natin for the CIR. If ever, I don't know if it comes out or it will come out as part of your board exam. You try to research into the limitations under the train law in the exercise of your zonal valuation. Okay, so the main item that I want you to memorize there is zonal valuations must be adjusted once every 3 years. Zonal valuation must be adjusted once every 3 years. Okay? So this is provided under the train law. You look into the different limitations. I think there are 5 limitations. You must first provide a notice to taxpayers, you consult appraisers, etc. But what's important to you here is that for zonal valuation, under the power of the CIR, it must be adjusted once every 3 years pursuant to train law. And what's the type of valuation provided by the national taxation? CIR, we call that zonal valuation. Local taxation under the local treasurer, we call it assessed value. Next, power to change accounting period. Power to change accounting period. So when we say change tax accounting period, so let's say you are using annual, then you can now use fiscal. So you are just trying to change your accounting period. Next, the power to abate or cancel tax liabilities. So aside from abate or cancel tax liabilities, we also have the power to compromise. Power to compromise. And then we have also the power to abate. So in your power to compromise, generally, we determine whether it is, there are two reasons, right? The first reason we have discussed earlier, we call that financial incapacity. The second reason for compromise is your doubtful validity. So in your financial incapacity, the amount of the tax due is 10% normally. While for doubtful validity, the amount of tax due is 40% of the basic tax. And in financial incapacity, who has the power, or in your compromise settlement, who has the power to compromise? Okay, so if that is below 500K and it is more than or equal to 500K to 1 million, or more than or equal to 1 million. So this is your regional evaluation board. This is your CIR, and this is your national evaluation board. When we talk about national evaluation board, normally it is composed of the different deputy commissioners. Okay? Normally, it is composed of the deputy commissioners. So when we say compromise, there are two reasons: financial incapacity, doubtful validity. The amount that can be compromised up to 10%. For without financial incapacity, you are only liable for the 10% of the basic tax. For doubtful validity, you are liable up to 40% of the basic tax. So what do we mean by that? So assuming you are liable for 100,000, you can compromise up to 40%, so babayaran mo na lang yung 40K kumbaga. But that must first be approved by regional evaluation board because it is less than 500,000 and below. Next, we have your abate or cancel tax liability. So when we say abate, you are now condoning or canceling the tax liability. But take note, when we talk about condonation, we are talking about the power provided by your legislative or also the president whatsoever who provide for that condonation. But for abate, this is now the power of the CIR. So I hope you can try to differentiate those powers. The abate, it is exercised by the CIR. Amnesty, tax amnesty law, condonation, etc. It could be provided by our legislative. So when it's only abate, then it's CIR. So when we say abate, we are now canceling the tax liabilities. So when you cancel the tax liabilities, the main reason is that it is arbitrary or it is unjust or excessive. Okay. Reasons. So again, two reasons. First, it is arbitrary or it is unjust. Second reason is that based on the cost-benefit principle. What is that? The cost of collection is greater than the tax to be collected. So for example, you will collect 100K. However, before you can collect 100K, you need to pay 150K. Will you still collect that? No. Therefore, you rather abate or cancel the tax liability pursuant to your cost benefit principle. Next, you have your closed business establishments. So you can close your different business establishments, especially if they are not paying taxes. We have the so-called Oplan Candado and your run after tax evaders. They still remember this one, Oplan Candado, wherein if you didn't really pay for the taxes, you the BIR can close your business for 5 days. Okay, even if you did not pay. And we also have your run after tax evaders, wherein if ever, ano na bang tawag dun? Rate. If ever you are a tax evader, the BIR can also close your business. So Oplan Candado, that is 5 days, max. 5 days. And 5 days 5 days minimum. 5 days minimum. So this is minimum. So, assuming, sir, I paid after the 3 days, can I now open my business? No, because the minimum is 5 days. We can provide for the maximum. It depends for the CIR if ever it wants to close your business for 10 days, but the minimum is 5 days. So, as long as there is a minimum period, you need to serve that minimum period before you can open. I don't know if ever it will come out, but you see, if ever, at least you know what is Oplan Candato and run after tax evaders or rate. Next, we have allocate income and deductions. For allocate income and deductions, this is applicable to multinational corporations or those corporations with a lot of subsidiaries due to transfer pricing. One method of allocating expenses is or to try to decrease the tax liability is by having a good pricing scheme, transfer pricing scheme. So the BIR can also allocate income and deductions to these different businesses. So the subsidiaries, including the parent, can be allocated for the different deductions and expenses of other businesses to avoid transfer pricing schemes. Next, to prescribe presumptive gross sales or receipts, we have already discussed this one. If ever there's a failure to issue receipts, then we can presume based on different benchmarking. So when we say benchmarking, you look into similar businesses and circumstances and you try to adjust it. Next, to refund or credit internal revenue taxes. When we say refund, we are now giving back whatever is the excessively paid tax or erroneously paid tax. When we say credit, you can use that to decrease the tax due of the taxpayer. Another one, to prescribe additional procedures or documentary requirements. We already know that. And to accredit or register tax agents. So when we say to accredit or register tax agents, these are um, these are agents of the taxpayer who will file and pay in behalf of them. Normally, if ever it is denied, if it is denied by the CAR pursuant to his executive function, then your main remedy is DOF. Okay, your main remedy is DOF. Okay. If the main rule, let's look into the rules again. So we have your legislative, quasi-legislative, quasi-judiciary, and executive. For quasi-judiciary, okay, so that is based on the rulings or based on the FDDA, etc. Where do we appeal it again? We appeal it to CPA. For quasi-legislative, where do we appeal it? DOF. For executive, where do we appeal it? Also in your DOF. If ever it is adverse, DOF for quasi-legislative. But since this is already talking about judicial power, then the next hierarchy should be the courts. This be the courts. So it will be CPA. While legislative and executive, it is only DOF. Just in case there is an adverse action based on the power of the BAR through the CIR, you know where to ask for review or where will you appeal it. For judicial, again, the courts, CTA. So if ever when we go to your tax remedies, you will see that it is already an FDAA or denial of your motion for reinvestigation or reconsideration, then your next mode of appeal will be an appeal to the court of tax appeals. But if ever it is a denial based on a ruling that is an action of the administrative, then DOF, executive denial, any action that is adverse, then DOF. So let's say, for example, you are asking for a compromise, you're asking for a compromise, or you're asking for a bait, then it is adverse to you. What's your next step? Will it be CTA or DOF? Since it is within the executive power, then your next step would be DOF. Let's say a denial. Let's say if the denial is based on the accreditation or registration of tax agents, hindi ka ni-register ni CIR, where will you appeal it. You appeal it to DOF. Kahit ito lang yung maalala nyo sa akin na if ever judicial, go to CPA. If quasi-legislative and executive, go to DOF. And last power. Executive power of the CIR, that is to delegate his powers to any subordinate officer with rank equivalent to a division or an office. So what cannot be delegated? So the rule is it can delegate the power. So sobrang dami na ng power na diniscuss natin, tama? Sobrang dami nun, alangan maalala nyo lahat yon. So ang kailangan nyo lang alalahanin ay, pero kung maalala nyo lahat yon, wala namang problema. Siyempre masaya tayo doon. Pero kung hindi nyo maalala, ang alalahanin nyo na lang ay kung ano ang hindi pwedeng i-delegate. So what cannot be delegated as powers of the CIR? That is the power to recommend the promulgation of rules and regulations to the Secretary of Finance. So it is only the Secretary of Finance who can really issue rules and regulations. You already know that. Who can issue RR? Department of Finance. Who can issue rulings? BIR. So I hope you also learned that during today's session. Next, the power to issue rulings of first impression. What is this rulings of first impression again? BIR rulings. So only the CIR can issue BIR rulings, especially if ever that is first impression. When we say first impression, it is the first time that the BIR can rule on that item. So for example, it's the first time for the BIR to issue on a tax-free exchange, then only the CIR can issue that. But what if it is not a first impression ruling? Can you delegate? Yes, because what cannot be delegated only is the rulings of first impression. Furthermore, take note of this. The CIR cannot delegate the reversal, revocation, or modification of existing rulings. You have learned before that the CIR has a power to revoke, abrogate previous rulings. And whatever is the ruling of the predecessor cannot be made to stick with the successor. So I hope you learned that a while back. Next, the power to compromise or abate any tax liability. Who can only abate or compromise tax liability? Generally, the CIR. However, you have learned already that we have now REB, we have CIR, and DNEB. CIR together with the aligned deputy commissioners are within the NEB. Next, the power to assign and reassign internal revenue officers to establishments. So only the CIR has the power to assign and reassign internal revenue officers. And normally, how long does the CIR reassign or assign revenue officers? Within 2 years. Within 2 years. And that's the end of this session. Again, do not forget for the three main powers, you have executive, quasi-legislative, and quasi-judicial. For the legislative, quasi-legislative, and executive, quasi-legislative, and quasi-judicial, do not forget for powers of the CIR that cannot be delegated. All others are to be delegated. Only 4 items cannot be delegated. Do not forget that. And that's it for our tax administration.